management in your portfolio and basically try to wait for better entry opportunities.
Jefferies on Entero Health. It has initiated coverage with buy rating and target is 1510 per share.
The promoters hold 85% stake in the company, which includes Bharti Airtel at 70%. And the mood is a bit gloomy when it comes to the large caps. They've taken a step back.
Banks themselves have been raising money through QIP. And it's not necessary that they'll be adopting the share sale route. At least that's not on the cards as of now.
Ekta, we are seeing a bit of a sell-off from higher levels.
Well, that was the day so far, and it is a red screen all across. No real big recovery. There have been intermittent pullbacks, but that's about it. The market's down again. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashad. With me, my colleagues Surabhi and Nigel. Guys, hi. Good afternoon.
Hi. We're still in the pink of health. And I think you can say it's a bit of the Friday cheer, despite the red on the screen.
I don't think I can pass this off as green. Huh?
Yeah, it is. You're in the vicinity.
Well, that's right. I think, par for the course, right? We had a bit of an ugly print coming in from the inflation data from the United States.
Yeah.
And then yesterday, there was some consolidation. But I think the market's still a little bit sketchy because earlier we were talking about March, the rate cut will come. Then you're talking about mid-year. Now it's talking about September. I mean, where is that headed? So some bit of uncertainty, but par for the course. 20 DMA is protected. Yeah. I think the Nifty is still in an uptrend and plenty of stocks actually doing well from the broader markets as well.
No, absolutely. And I think that is the thing. The broader market is not looking bad at all. The mid and small cap indices are actually outperforming what the large caps are doing. But there is a cut. And we were talking about this on Wednesday that, CPI numbers, at least in the last 6 months, has had an outsized move. I mean, it's moved market substantially. So that's kind of keeping with the tradition. We would have moved yesterday. Yesterday was, of course, a holiday. So we kind of... in a way, at least in the very near term, are paying the price today. But that's just sort of one trading session in what has otherwise been a pretty healthy sort of market all across. Just a few points before we go any further. Under pressure, intraday bounces sold. Not very many, at least not sharp anyway, the intraday bounces. Nifty is below the 22,605 level. Now, why is that important? That's the 40-hourly average. If you're trading, then these sort of indicators become important. We are under it. A sustained kind of move the market trading and spending a fair bit of time under it perhaps opens up downsides. Nifty Bank is above that level for now. The 40-hour is 48,472. Of course, worry is global turbulence unleashed by the aggressive rate sort of repricing of rates in the US. The 10-year, for example, is up some 22 basis points in the US in the last 2 sessions. And as I said, broader market is not looking at that bad. I mean, you may hold a portfolio of stocks and they're doing just fine because, the broader market, lots of stuff in the green as well, which we will highlight as we go along. Surabhi.
Well, I'm just looking at global markets because, like you're saying, a lot of the Asian picture was fairly murky as well. The Hong Kong market was lower. Yep. But European markets are actually not too bad. The German market is up 1%. The CAC has rebounded 1%. In fact, one would have thought the US market itself, I mean, it fell quite a bit on Wednesday night, but there was recovery on Thursday. Yeah. So one would have imagined that we've kind of skipped the fall. But no, India has decided to make up for that one trading day that we were off on. And, this is playing out. The issue with the large cap screen is that now it's becoming a really wide fall in terms of sectors. So, of course, the bank Nifty is leading it with a cut of about 0.8%. But, there's almost everything is down. IT is very, very tepid ahead of the start of the earnings season. TCS is trying to be the braveheart, trying to retain its head above water, but it's tough. Even TCS is at the flat line. That's the IT index. It struggled pretty much throughout the second half of the session. And then you have, L&T, ITC, a lot of these other heavyweights which are down quite a bit. By the way, just a word on Titan. The correction is only 2 or 3 sessions old. But it's fairly pronounced. You can't ignore it now. With gold prices sitting at 72,000, I mean, that's the retail purchase price. Is it going to start hitting demand? I think that would be a real question. And Titan has had a stupendous rally, so maybe some money coming off the table there. We'll discuss these trends as we go forward. But Nigel, anything specific on the mid-caps? Anything else that you're spotting?
Well, if you just look at the broader markets, this market is picking and choosing what it wants to pick, particularly on a bad day. You pull up Excite. The stock was as flat as can be. Just take a look at what's happened to the stock in the last few minutes. That's holding strong. You pull up Polycap. That's another stock that went down, below that 4,000 rupee odd mark. That's holding quite strong in an otherwise wobbly market. A couple of these stocks are still doing well in a market that's not, not really outperforming anything. Hindustan Copper started off in the green, it went into the red, but that one as well is holding up. So the market's really picking and choosing what it wants to pick, in a market like this. Earlier today we spoke to the management of Crystal, the one that provides its services. That stock is now up close to 16%. They're guiding for a 30% revenue growth for the next 3 years or so. And all through the day, that one is trending up as well. So pick and choose those spaces and, in fact, keep building a portfolio at times when the markets are a little bit wobbly. Well, let's find out how do you trade this final hour, though. On the index, first up, I think Mitesh Thakkar is with us. Hi, Mitesh. Good afternoon and good to see you in. Well, it's been a good day actually for the bears on the headline index, but all is not lost for the bulls. The bulls are sitting on plenty of profit. 200 points down on the Nifty. Jumping in now or waiting for a bigger downtick?
I'm not jumping in now, despite the fact that, both the indices, they are at the immediate support levels. So the Nifty, for example, I've maintained that, 22,530 is the support area. We have had a low of 22,538 and we are still trading around those levels. We just bounced back 20 odd points. Similarly, the bank Nifty, I think, the first support area is close to about 48,540 and we've had a low of around 48,527. So again, just managing to hold on to that. My worry is that the hourly charts are slightly getting weaker. I think the indicators which are overbought are now turning down, which means that this could be a slightly deeper kind of a pullback or a more sideways kind of a consolidation. So given that, no hurry to take longs over here, despite the fact that we are at support levels. But yes, in case we start breaking below these levels, today's lows, then I think I would reduce my long exposure, which we have already been doing. So in that sense, waiting it out, I think after a rally, this could be a consolidation or a pullback phase. We'll figure it out in the next few days. But for the timing, it looks like that the uptrend will take a breather. So we'll just be on sidelines. Right now, I have one buy and one sell call. Crompton is on the buying side. Keep a stop at 290. Look for targets of 315. That's having a very strong price and volume action. And Britannia is on the negative side. Recommend selling here with a stop above 48.10 for targets of 46.50.
Okay, Mitesh will sort of connect back again, but thanks for that view right now. Appreciate it. Market down almost 200 points. Nilesh Shah is now joining us. He's Managing Director, Kotak Mahindra Asset Management Company. We also have Prakash Diwan, who is joining in for a quick chat on the state of affairs. Gentlemen, good afternoon. Great to have you with us here. Nilesh bhai, let me start by addressing the market for a quick bit, if I may. You've got pretty aggressive, right, repricing of the rates market in the US after that CPI print. But historically, last 5-6 months, and this is the third straight beat in inflation numbers there, but historically this move beyond day one has not lasted. Things go back, in a more benign kind of a fashion, and the market's done well. Just wanted your thoughts. Will we see a repeat of that, or do you think we are at a slightly more important juncture?
I think in the US rates market, there is ultimate optimism that at some point of time, Fed will have to cut rates. This optimism is driven by the fact that US debt to GDP ratio is now in excess of 120%. They are accumulating $1 trillion of debt in at about 100 days. There is uneven recovery in US where people with leverage to student loans, credit card loans, and mortgage loans are getting the burden of higher interest rate. So in some sense,
I think we're losing that line with you, but I'll just sort of come back to you as soon as I'm told that the line's good to go, but the frame was freezing. So we'll just try and fix that and go back to him as soon as we have that up and running. For now, by the way, not very much going on with no great change. I mean, still down about 200 points. Prakash is also with us. Prakash, just a quick word on the market itself.
Good afternoon, Prashant. So I think the market's doing its own thing. It's kind of rewarding patience and conviction. Actually, people who have bought dips, they've been rewarded. People who try and book profits at regular intervals, they've also made money. So it's a nice situation. It's not kind of capitulating as it was seeming to give some sort of an indication when small caps and mid-caps had some sort of a, cool off early March. But my sense is the kind of money that's looking at coming into our markets, whether it's through the ETF route or whether it's, even the larger actively managed FIs, a large part of that will probably come in post the election outcome, right? So whatever outcome you've kind of factored in, but there will be a milestone-driven liquidity gush which could happen. And my sense is the market's building up in anticipation of that. So good. And then, of course, we are staring at earnings season today onwards, largely with TCS flagging it off. So it will start kind of, getting directed more by that and some news flow on certain pockets where there's a lot of smart fundraising that's happening. We've seen the Bharti Hexacom IPO get so well rewarded. And so I think the market's going to look for those cues apart from the earnings season numbers and then it'll take its right. But the undertone is definitely positive. That much I can tell you, Prashant. There's no disappointment in any pockets where people are finding it difficult to kind of allocate more money.
Hi Prakash, good afternoon. Prakash, I want to ask you about Exide. That's the one that's moving in style in the last few minutes. If I look at it from pre-COVID levels, in February 2020, say it was around 200 rupees. Till exactly a year ago, it was still 200 rupees only. So around 3 years, it didn't do anything. And now in a matter of 12 months, the stock has more than doubled. And, in this week itself, it's moved from an early 300 to around 400 rupees. Your view on the stock at current reckoning?
Good afternoon, Nigel. So, if you actually nailed it, you calculated from a 3-year perspective, this 100% return probably averages out at a CAGR of 35% or whatever, which isn't something which is eye-popping in that sense. Of course, you could attribute the slow move in the first few years, given the slowdown in the auto sector as a whole. But what's now kind of working towards in their favor is the kind of tie-ups that they've started announcing. It's the shift to a new technology platform that's going to help them because batteries is something which you can't ignore, whether EV vehicles sell more or less or, the larger ones or the smaller ones. But if the likes of Tesla and all are looking at India from a manufacturing-based perspective, not necessarily just a market perspective, you will have a lot of battery tech coming into the industry. And Exide has the kind of right to win given its strong distribution, strong franchise with OEMs and all. So they'll be able to carve out a lot of R&D allocations, which will, start kind of building up the trajectory for the next 3, 4, 5 years. But batteries, you really don't have any contenders except for a couple of them. Exide stands right at the top. So that's where, the positioning is helping them. And of course, the numbers have also improved on the ground. So, but then, P expansion and EPS growth doesn't go always in sync. There's one that leads to the other. And then that's exactly where we are seeing the P expansion catch up on Exide. But I think it still has some legs as their plans start kind of reaching commercial stages. You'll probably start seeing a build-up of expectation on earnings improvement as well.
Okay, all right. I think Nilesh is with us. Nilesh, just to complete the point, I mean, we lost you there. The line broke.
Yeah, sorry about that. US rates market is constantly discounting that ultimately Fed will cut rates. This is driven by their accumulation of debt of about $1 trillion in 100 days. Debt to GDP ratio for government debt at 120% plus, and uneven recovery in US, which is creating pressure on people who are leveraged on student loans, credit card loans, and mortgage loans. So while data right now is not supporting rate cut, market is assuming that both US government and US Fed will be looking to cut rates as and when data becomes favorable, which is why it is always 3-month rolling forward rate cut expectation.
And in a way, some have said that it's the best of both worlds, right? I mean, it's the growth is presumably strong, but there is a lollipop of rate cuts down the line. So sometimes waiting for something is more pleasurable than actually getting it. So it's like
Absolutely. It's a Goldilocks scenario.
Absolutely. The other big thing, Nilesh, I wanted to talk to you about was the Vodafone. It's a big event, right? The FPO, which is going to come through. And the telecom sector, the incumbents have done very well, be it Bharti. I mean, lots of interest in that particular space. And now you've got Vodafone Idea, which is essentially going to launch this FPO. They've committed infusion from the promoter entity Aditya Birla Group earlier this month. It's like a revival of sorts. If they do get this fund infusion, maybe bank lines open up. The government, of course, owns over 30% in the company. Just wanted your thoughts broadly on the sector, because a lot of interest. There's always been a lot of interest in this stock. And now maybe, if the FPO, etc., goes through and, the cap table looks strong with strong names, you've got a chance of a healthy third player in the sector as well. Your thoughts, Nilesh Bhai?
So, Prashant, as Kotak Mutual Fund, we remain overweight telecom sector, driven first by the fact that digitization of economy is a long-term trend, and a strong network through telecom sector is backbone for it. Second, the market is also discounting tariff revision. We have highest data usage of 19 GB per user per month, and the lowest ARPU of $2 per user per month. At some point of time, tariff revision should happen. That is what market is expecting. The second thing is also shift of 2G users towards 3G, 4G, 5G users. This premiumization, which played out in consumer staples and consumer durables, is also playing out in telecom sector. As people move towards higher paying network, automatically profitability of telecom sector improves. The third thing, which is probably going to happen in telecom sector over a period of time, is that 5G services, which are being today offered almost at same rate as 4G, will get people used to it, and they will then start paying higher price for it. So there is a strong case for telecom sector revenue to go up disproportionate to their cost over a period of time. And in telecom sector, access to capital is critical for success. This is a business model where you invest upfront in technology, in network, and monetize it over a long period of time. So people having access to capital should do well in telecom sector over a period of time. And it is riding today on tariff revision as well as digitization, which are longer term trends.
Well, Nilesh, hi, good afternoon. I guess the market is definitely, excited about the telecom sector, that's for sure. And I think today's listing, if anything, proves that and shines a light on that. I'm talking about Bharti Hexacom. By the way, the stock is still up 42-43%. It's a smaller company from the Bharti stable where the government is also a major shareholder, and they operate only in 2 circles. So it's a smaller operation, but nonetheless, the market's liked whatever Bharti Hexacom has put on the table. But Nilesh, to come back to that point of tariff hikes, and for the market, I think that has been the big pivot that everyone's waiting for, but there's been no meaningful move. I mean, companies have tinkered with tariffs at the margin, maybe some premium end offering, but not that bulk space, the bulk prepaid 4G space. Now, if we do have a healthy third operator as well in the country again, then doesn't that diminish the chance of having a big tariff hike?
So one, that could be the case. Never say never in the market. But for last 2 years, there has been no revision of tariff upwards. The usage of data has gone up substantially compared to global averages. It will be fair to assume that at some point of time, telecom operators will focus on cash flow generation and profitability and price their product appropriately. We have seen consolidation of sector. Consolidation in a sector like cement has resulted into price discipline. We didn't see that in telecom sector for a while, but who knows, things could be turning around now. And at least as of today, markets are discounting that after 2-year lull, there is a reasonably high opportunity, notwithstanding revival of third player, that there will be tariff revision on account of higher data usage, on account of 2G consumers, users moving to 3G and 4G, and on account of 5G users willing to pay higher because they are getting used to 5G speed.
Well, Nilesh, good afternoon. Just hold that thought. I just want to get a view from Prakash on, idea itself. Prakash, with your disclosure, could you tell us what is your view since this FPO has been announced now?
Yeah, so as a matter of disclosure, I do have a position in this name. But of course, my view corroborates a lot with Nilesh Bhai's listing on the fact that it's a sector that's seen significant amount of consolidation and has matured in a very nice way. Of course, at the price of most of the operators not making money, but consumers have enjoyed the fruits of this expansion for the last many years. And we probably pay one of the lowest rates in the world. But for Vodafone Idea, Nigel, it's very simple. It's available at a market cap of 62,000 odd crores, right? If you understand the replacement cost, when Jio launched itself and put its entire might to go all India with the rollout, they probably spend upwards of 3 lakh crores. And even if Idea is today, let's say 1/5 or 1/6 of what Jio does in terms of presence or subscriber base, 62,000 crores is not something where you are overpaying. So I think the FPO is priced very smartly. It does leave the opportunity for growth going forward. And a lot of people today probably seem to be believing that the 10 rupee arbitrage with the current market price is significant enough for you to sell if you are holding Vodafone and buy in the FPO. But I think the response in the FPO, particularly from the QIB segment, will probably decide how soon the stock would revive, while the company itself seems to be on a path to revival. And as all understand, telecom is something where we've seen a phase which is about 3-4 years of acquisition by the incumbents, which was Jio and to some extent Bharti in its expansion mode. Then there's consolidation, and now there's profitability. So even if the ARPUs were to be hiked a bit from where they are at 200 odd, it means a significant change in the revenue profile because they no more need to spend too much on client acquisition, right? The subscriber acquisition part is probably being spent on. There's a significant amount of effort and time that's gone into it. Now it's time to kind of start adding more value from what you're offering. And 5G rollouts have just got done. I mean, it's just been a year that we saw last 22. It started. The universal service obligation made it compulsory for them to just be present in a lot of locations. The actual usage and monetization of that infrastructure, and that's reflected in the Indus Tower numbers as well, right? So it's all getting together, falling in place of sorts for most of them and for Vodafone Idea as well. Given the fact that they've survived the tumultuous first 3-4 years where they were cash strapped. And remember, those 2 years we were very disappointed with Vodafone because there was no money coming in. Now there's money coming in from all quarters. The promoters are willing to put in money. They've been dodgy about it, but they've started. They've committed to investing into the business. There's an FPO around the corner. So I think it's definitely something where, in terms of timing, it could probably be a very different phase for most telecom players as well as for Vodafone, particularly given its cap table getting to be restructured so rapidly.
Okay, all right, gentlemen, got that. Thank you very much. Nilesh, before we will let you go, we've discussed telecom at length. Just, your overall thought on the market. And since this is, top of mind, this is a burning issue in the last 24 hours, this whole issue of FPI taxation is back, courtesy the amendment to the Mauritius Treaty, right? Our colleagues in Delhi are also trying to get more clarity on this, whether this is going to impact investments made before April 2017. Just your thoughts on what you might have heard, the chatter you might have heard in the last, 36 hours and the cool-off that we're seeing in the market today.
So we will be actually going by what clarification comes. And I was just listening to Dinesh Bhai on this issue, and he had some views on how FPI taxation will matter. Our submission will be that today India is getting a very, very high valuation premium because of clarity of policy and governance. And we should clarify things in a manner so that it does not create any confusion in the mind of global investors. I don't think so. We have to now convince global investors on the growth side. They are all fairly convinced. But the stability of policy and governance standards are something which differentiated India vis-a-vis rest of the peer group. And we must maintain that differentiation.
All right, we will wait for that clarification. It's an important one, and we'll sort of get your views once we have that. Thank you very much, both of you, for joining us. Nilesh bhai, appreciate you joining in, and thank you very much for being with us here. Prakash, it's always a pleasure speaking with you. Have a good weekend, gentlemen, and speak to you soon again. Thanks indeed. Well, I think we've got the market, which is down about 22,535 is where we're at. We're back. More market conversations on the other side. Stay with us.
Welcome back. Well, you're with us on Closing Bell. The next major event for the market is, of course, earnings. And TCS is going to kick off the season for the IT sector. Let's go across to Rima to run through some of the key expectations. Rima, over to you.
Well, expect a decent quarter from TCS. Numbers, revenue growth is seen at about 1.6% in dollar terms, quarter on quarter. In constant currency terms, growth of 1.3%. So, this time, it's not that the numbers are going to be much better than what we've seen in the December quarter. In the December quarter, the company had a 1% revenue growth. This time, we're expecting about a 1.3% revenue growth. So, growth rates are largely similar. But TCS's growth rates will look superior than peers because of the large BSNL deal, the ramp up of that. And secondly, even the hope that BFSI is turning around, showing some green shoots. Margins for the company are seen at 25.3%, expanding as the headcount of the company has come down over the last couple of quarters. Profits on an adjusted basis are up 3%. The reason we're looking at the adjusted number is because in the prior quarter, Q3, the profits were depressed because of that provision for that epic legal case. So stripped of that, adjusted profits up 3%. The street will watch for deal wins because it's a peak, it's a window into future revenue visibility. 2, recovery in discretionary spends. Remember, Accenture, killed recovery hopes. They spoke about a further deterioration in spending, cutback of shorter cycle projects. So the street is going to be watching for commentary on discretionary spends very closely. Any recovery in pockets like North America, BFSI, communication, high tech, retail, which have been under pressure for the company. And also finally on headcount. Headcount for the company has declined in 3 out of the last 5 quarters. Does that continue to stay depressed, or if demand is recovering, is the company going to start hiring again? I think the supply side dynamic is going to be watched carefully by the investors too. Back to you.
Rima, thanks very much for that. We have Sanjay Parikh now joining us. He's founder and CIO at Soham Asset Managers. Sanjay, it's always a pleasure having you with us here. Thank you very much for your time. We get these sort of dips once in a while, and today, arguably, of course, because the dips are short-lived and shallow, it's a slightly larger dip, right? 1% or so. Just your thoughts, Sanjay, because the accepted and what the wisdom which has worked is just buy the dips, right? Use it to buy stocks that you like. Yeah. Any sort of rethink there? There have been many, especially on the technical side, who pointed out that maybe in the next 1-2 months, we are perhaps in for a bit of a sideways, maybe even slightly down kind of market. Do you agree with that? It's very near term, I know, but just your thoughts to begin this chat.
No, Prashant, I totally agree. So I think we all know the fundamentals are great. You all had a session recently, which I attended, and, the big story for India is very, very good. All the balance sheets are firing. But what is constraining everyone is valuation. And hence, certainly, to look for stocks where there are clear attractive opportunities on a bottom-up, be it large cap or mid cap, they are selective. So, of course, all sane investors would want to buy at a good value. And that is where, selectively, wherever there are opportunities or pockets or mispricing is there, at least we are looking at, purely from a stock perspective. Clearly, as you said, it is a bottom-up buy on decline because, you just look at 3 to 5% lower and it looks very reasonable then. I mean, if the expectation of return is reasonable. So that is where we are placed. So that's why I think it will be more of sideways for a while. We have events ahead like, which is all in the price, according to me, of a continuity in the government. And then we have monsoons, which is very important. And I think it would be volatile in the interim, but broadly, I think markets will want to look for these things before it takes the move for the next, which is very healthy actually. That if market remains in a narrow band, and then we take up as we look ahead on these elections and monsoons, and then we look for 26, where we again have a good upside.
All right. Hi, Sanjay. Good to see you. And as always, we were just discussing with Nilesh as well as Prakash on the entire telecom industry because we have idea that's come in there. They are saying that, they're going to do an FPO and they could come out with the required money. Now, you all are relatively overweight on telecom in comparison to what the benchmark has. I think you have Indus in there. You're playing Bharti via both the instruments. Are you all factoring in a 3-player or are you all factoring in 2 players? I mean, and what about the tariff hikes? The ARPU hike has been spoken about for long. Now it appears like, it's almost certain it comes, if it has to, post the elections. So your view on the telecom space and what are you all factoring in?
Yeah, Nigel, so as you rightly said, we have almost 7% weight. Bharti has been structurally overweight for us now for 18, 20 months. Last month, I added Indus, and overall weight is higher. And we believe, actually, if there's a 3-player market, it is good. Because, eventually, economics has to prevail and there has to be price hikes. Government also is quite supportive of this. They've been vocal that we need a third active player, not a weak third player. And, hopefully after the elections, we need not 1, but maybe 2 price hikes, not immediately, but over a period of after elections, maybe 12 to 18 months. So that would make the economics and ROEs look better for all 3. And I think the overall growth, as Nilesh Bhai recently also said, with 19 GB consumption, with digitalization, the pricing power, everything on affordability, we have aspirations. So affordability is not an issue if somebody were to pay from 200 rupees ARPU to 240 rupees ARPU. I don't think the demand is going to significantly get affected. So I think it's important. In fact, if there is a third player, it will be better because one may look at competitive on a narrow angle, but on a longer term perspective, you get pricing power, you have more discipline, hopefully after the elections, and that will actually help. There is enough growth headroom. So I think that is how we think about it. And we don't think from a myopic angle that if Vodafone gets, that's the equity, it will have impact Bharti because pricing power will be positive for even them as well.
Okay, just to give some context to the flashes at the bottom of your screen, and we'll try and get both Tim C and tax experts to interpret this. Now, it all rests on this whole issue of the amendment of the India-Mauritius Treaty. It's all boiling down to one question, and that is whether investments that were made prior to 31st of March 2017, whether they will now also be subject to capital gains tax or not. And that's where the debate lies. Now, some of the sources that Tim C is speaking to in North Block, in the government, they seem to be indicating that this is not technically retrospective because the tax is levied at the time of sale. That is when you have a capital gain, and that therefore that's the interpretation that perhaps the tax can be applied. However, the contention that the tax fraternity is making and a lot of investors have been making is that in the earlier amendment, grandfathering was promised to all investments, all FPI investments coming in, FDI, FPI investments coming into the country from Mauritius up until 31st of March 2017. So the biggest question to sort of, distill this down is whether the old investments still are grandfathered or whether capital gains tax will have to be paid if those investors are exiting now. And folks, when my reading is that I think this has become a very hot contentious issue now, looking at the spate of block trades that we're seeing, the whole huge action in the market where there are a lot of PE exits, a lot of funds have been exiting their positions and they've made handsome gains. So I think it's going to boil down to whether those exits will now be subject to capital gains tax after this amendment comes into effect.
We'll wait for let's have Dinesh Kanabar and others join us once again because this is not a good look. If this is what, as Surbhi is pointing out, if this is what this means, then it certainly is not something which many have been expecting. As we had Nilesh Shah earlier of Kotak AMC. I mean, the general almost understanding is that they'll clarify. I mean, there's no question of anything doing anything in a retrospective way. But if this is the interpretation, then I think we'll need to get more perspective in terms of what the impact, etc., is looking like. So more on this kind of as we go along. The market's down another a little bit more, actually 230 points. We've been down 190, 195. So maybe a little bit more here is what we've seen as far as pressure is concerned. Sanjay, any other sort of ideas, themes, etc., that you're looking at right now?
Yeah, so as I said, we increased our weight on the beneficiary like Indus Tower last month. And also we added metals in our portfolio because we believe there could be an opportunity there. So that's where we've had, and we've booked some profits, raised our cash in oil and gas space in the PSUs which held. We booked profits there and raised our cash to 7.5.
Okay. Just to sort of, talk about the big themes, Sanjay, from here on, anything fresh that's come onto your radar? Though, of course, markets at all-time highs. I guess not easy to get fresh ideas. But in case there's something else that you are now researching, looking at.
Yeah, no, so it's very important. So we're meeting a lot of mid-cap and small-cap companies across the board. So it is, a diagnostic company. It could be a capital goods company. It could be an SME financer, housing finance. And over the last few days, we met almost across a specialty chemical company, a leader in specialty chemical. And what is coming out is that they are absolutely gung-ho broadly across the board. I mean, you'd want to buy most of them actually. But the problem in a lot of them is valuation. So I think the good picture is that, the breadth, and I said, is across businesses. And the fundamentals, their approach, their scalability of a 3 to 5 year view that they have, the balance sheet is in place. It makes you very, very positive. But only thing is, the valuation. So, what we're doing is we just meeting all of them, waiting for a right entry point, keeping our things ready. And at the right point, entry point, when the price is comfortable, would buy. That's our strategy. Overall sector, we've taken a big underweight call on IT, on FMCG and oil and gas. And by and large, it has worked for us. That's the way. Other domestic themes, we are positive and we continue to remain.
Got it. Sanjay, we'll leave it there for today. Thank you very much for joining us. Appreciate it as always. Have a good weekend. We'll see you back soon. We have Pranav Saita of EVA India now joining us on the flashes which are at the bottom of the screen. Pranav, good afternoon. Good to have you with us here. Prashant here. Now, let me just read what this the story says, right? It says that it is understood that new provisions will apply to even past investments where the taxable event occurs post coming into effect of the protocol, which means that if an let me, without interpreting it for you, why don't I ask you to interpret it for us? What does it mean, and is this what you expected, or is this something which you did not expect? Go on.
Yeah, so if the taxable event, if I heard you right, if the taxable event, meaning the sale of shares or the capital gain accruing arising, happens after the protocol comes into effect, which means after both Mauritius and India notify the protocol, then the protocol will apply, meaning the transaction will bear tax subject to the Mauritius treaty if the principal purpose test is satisfied. So I think that's also consistent with how we were interpreting it. The thing, of course, still remains what happens to shares which are grandfathered, which means which were originally acquired pre-2017. If they are grandfathered shares, then it would be nice if we could get a clarification that those shares will continue to remain grandfathered and the test of principal purpose.
But that's the whole. Let me read out the next point, right? It says it is normally understood that that taxability is only post the date of the treaty coming into effect, even where the investments have been made at an earlier date. What's your sense? I mean, will the pre-March 2017 investments continue to be grandfathered, or doesn't matter when the purchase was made? If the sale is made after this new amendment comes into effect, one will have to pay tax in India. Is this what it means? Yeah,
so it could mean, as I said, two things. One is if the sale happens after the protocol comes into effect, irrespective of the date of acquisition, this would be taxable. The treaty protocol would apply, principal purpose test would apply. The other way is that it is ambiguous or silent on what happens if it is pre, but so much pre that it is pre-March 17. Because it could be pre the protocol, pre-2024 June, let's say, but after 2017 March, that would certainly be taxable. I don't have much doubt. Taxable as it would be subject to the principal purpose test. But it's very unclear as to whether this would apply even to acquisitions pre-2017. That I don't think is still very clear.
Pranav, and that is the billion-dollar question, right? Not billion, billions of dollars worth of a question, right? Because I guess investors might argue, and tax experts may argue, that the whole point of grandfathering was to ensure that investments made up until 31st March 2017 are not going to be touched. The ones made from April 1st, 2017, they were under the Indian capital gains tax regime. But does this amendment undo that grandfathering? What do you think, looking at the statements available today?
And that is indeed a big question. I think the way the wording today is, it's not very promising. So it seems to be against the taxpayer. And we are really hoping that the government clarifies this and makes it clear that that's not the intent.
If anything, I think we have Mr. Kanabar on the line as well. Pranav, I was just adding that our colleagues are picking up what seems to be some sort of a clarification from North Block. And these are fresh updates that are flashing on the screen right now. And it seems that North Block sources are saying, and I quote again, it is normally understood that the taxability is only post the date of the treaty coming into effect, even where the investments have been made at an earlier date. Thus, it is not retrospective. Mr. Kanabar, great to have you back on the line, sir. The view that seems to be coming from New Delhi is that taxability arises when you sell. So if you're going to sell after the date of this amendment, well, then you have to pay tax. It's not retrospective. Does that hold water with you?
So Surabhi, we are not here trying to be good at semantics. The issue really is, as you were asking earlier, that if investments which are currently grandfathered, will they continue to be grandfathered or not, period? And if the sale happens after the date of the protocol coming into force, but the investment was made at the point of time when grandfathering was applicable, then will that grandfathering continue to apply or not? And unfortunately, the wordings as they stand today lead a doubt in one's mind, and a significant doubt in one's mind, that grandfathering will no longer be available. And therefore, if the government does indeed want the amendment to be prospective, and if it is the government's intention, that the amendment should not create hurdles, then the only way to do it is to say that the grandfathering already applied will not be revoked and will continue to apply.
No, absolutely, Mr. Kanabar, take your point. Yeah, retrospective, prospective is becoming a matter of, grammar and, word debate. I think the moot point is whether investments made prior to 2017, whether they'll remain grandfathered and out of the tax ambit or not. And that's the billion-dollar question, really. Just to, talk about the timing of this, Mr. Kanabar, any thoughts? I mean, we are in a capital market which is seeing surging block trades. MNCs are selling. I mean, we had BAT selling out its stake from ITC just a while back, and I can just go on naming transactions. A lot of private equity funds are selling, and many of them are foreign entities. I'm not sure how many are domiciled out of Mauritius. But the fact is, there's very heightened exit activity from the secondary market, from the listed markets. So, I mean, could that have a bearing? Do you see any correlation in terms of the timing of this amendment?
Personally, I do not really. As I mentioned to you earlier also on this show that the principal purpose test is something which OECD has prescribed. This is not the first tax treaty which India has entered into where the principal purpose test has been prescribed. And rightly so, it ought to be there. If one of the principal purposes why you use a jurisdiction was tax avoidance, then treaty benefits ought to be not allowed. I think the issue is the second subpara of article of the protocol, which is creating a problem as to where does it apply. That's the limited issue. And given the fact that there is grandfathering, that should have been clarified. I do not think this amendment has been brought about at this point of time, taking into account the current capital market. It is just a part of our ordinary process, which has been happening across all the treaties that India has entered into.
Okay, all right, gentlemen, thank you very much. From the way the wording of the original protocol is and what our colleagues in Delhi picking up, I mean, it seems to be fairly clear from the government standpoint, but we need a specific mention on grandfathering, whether it still holds or not. Thank you very much for joining in with the fresh perspective on this extremely important matter. Let's take a break on that note. We'll come back on the other side and get you a check on all the buzz from dealing rooms.
Welcome back. Well, the market's at the day's low, but still defending the 22,500 if you're looking for some solace. Nimesh joins us to fill us in with what he's picking up in terms of the dealing room action. Hey, Nimesh.
Hi, Nigel. And it's a bit of global risk off, and that's adding a bit of pressure on the Indian markets as well. I guess a bit of reason to do some profit booking as well. So par for the course. But again, interestingly, the feedback is there is the FIs are on the positive side. There's going to be a small market at close basket buying as well at a leading FI. So this sell-off doesn't look like it's largely done by very large FI selling or a DI selling. That's from a flow perspective. I guess from a sector point of view, the delivery-based buying in metal limbs continue. So that metal stock continue to outperform. A big delivery-based buying today in both Vedanta as well as in Hindalco from larger FIs. That's the overall feedback. I guess all eyes will be on the TCS results today, and that will set the tone not only for the IT names but for the overall earnings sector. So that's something to track. But again, I guess today's correction is par for the course, but no large FI selling is what I understand from a flow perspective.
Okay, all right, no large FI selling, so that's good news. Nimesh, what about individual stocks? What are you picking up?
So in terms of individual names, the first stock is Reliance Infra. This is interesting. The stock was down 20% yesterday. The stock opened 20% down in today's trade as well, but recovered from the day's low. There was a large block, nearly 1.5% equity got changed hands. And I understand some large HNI investors and some family offices were buyer at lower levels today. So some bit of delivery-based buying is back at those levels of 200, 180 levels. So that's the first stock. The second name is Navin Fluorine. Second day running delivery-based buying in that stock. The stock was up 6% yesterday, up 2.5% in today's trade as well. I guess from an earning perspective, there is a sense that maybe this quarter could be soft. There were some upgrades as well, and hence a bit of outperformance in that stock in today's trade. The third name is Godavari Power. Within the small metal names, this is one stock which has been relatively outperforming of late. Some bit of HNI interest seems to be back on that stock. So again, a day when there will be high delivery-based buying in that stock as well. And the last name is UPL, again part of the chemicals basket. While quarter 4 is expected to be quite weak, there are some challenges as far as the debt concerns as well. But for the last couple of days, purely from a valuation point of view or from a stock point of view, some bit of buying has emerged at lower levels in UPL as well.
Okay, got that. Thanks very much, Nimesh, for all the action from dealing rooms. The market is down a whole 1%, and hard to link these things, the cause and effect equation, but it seems that all the chatter around FPI taxation and investors from Mauritius, that has taken a toll on sentiment today for sure. Let's go to our colleague Timsy, who of course got us all of those updates from her sources in New Delhi. Timsy, so at the heart of this entire issue, as our tax experts were just telling us, that whether it's prospective, retrospective, those are matters of language and debate. But I think at the heart of it is whether pre-April 2017 investments, whether they remain grandfathered or whether they will now be subject to this PPT. What's the sense you're picking up?
Well, let me put it the way it has come to us from sources, that it is not retrospective, as taxability is only post the date of treaty coming into effect. The new provisions will apply to past investments where taxable event occurred post the treaty date. So very clearly sources saying that it is not retrospective. And now what will happen is that now each country will do its procedure to make this protocol effective. At the country level, India will also inform Mauritius once it is ready with the notification of the protocol to make it applicable. So that is what they say. And just to add for our viewers, another important key area here, that India will inform all of this, India will make it clear, and the bilateral agreement will be made to get into effect to BEPS, that is the anti-treaty abuse provision of the BEPS. And this is what the government is saying, that when it comes to a clarity, when it comes to the date, yes, it will only be after the April. So before that, whatever taxability was there will not be there, and taxable, the tax liability will be only post the treaty comes into effect.
Okay, thanks a lot, Timsy, for stopping by and giving us some clarity on that particular issue. By the way, when we're having that chat, just pull up a few stocks. Vodafone Idea, I recall the stock was down 4.5%. That's moved to above 13 rupees. So pull up the intraday chart on that one. Sharp spike is what we've seen. Vedanta, well, we've been highlighting that in terms of metals, if metals are going to do well, then Vedanta, you have the risk of what the promoter entity is going to do next. But that stock has been a beautiful stock. In fact, in this week itself, if I'm not mistaken, it's up close to around 15% or thereabouts. So big up move is what we're seeing on that name. And a couple of other notable movers on the broader markets. Interglobe Aviation, there were 2 downgrades that came earlier today. I mentioned this earlier this morning as well. And that stock has moved to the low point of the day. Midesh Thakkar is back with us. Midesh, first your closing comments on the Nifty's move today. We're down 240 points, as well as a couple of trading ideas.
So Nigel, to be very honest, not very happy with the way indices have moved. They've hit support levels, but there's clearly lack of bounce back, at least till now. And with 10 minutes to go, we are closing at the day's low. So I'm not quite, optimistic. We've been reducing our long exposure, and that is what I suggest people do, because there could be a chance of a slightly deeper pullback happening over here. Having said that, I have a BTST on IRCTC. I think that's a stock which has shown good traction. BTST here with a stop at about 1045 for targets of 1080. And HCL Tech is on the STVT side. The Cumin taking STVT here with a stop at 1530, 1531 for targets of 1505.
Okay, all right, Midesh, thank you very much for that. Let's focus on some stocks in news today. L&T has been under pressure. Now, there is a Kotak Institutional Equities note on L&T. Let's go across to Vivek, find out what Kotak is saying. What specifically is the call on L&T, Vivek?
Well, L&T is a stock in focus. So Kotak Institutional Equities has flagged off certain concerns as far as the company's capex or the company's order prospects from the Middle East is concerned. Now, remember, number one, Kotak has a sell stance on the company. They have a target price of 3,100 rupees. What they're calling out is the fact they're saying that recent news flow indicates that there could be a tapering or a moderating of capital expenditure as far as Middle East, especially, the largest oil and gas company in the world, Saudi Aramco, is concerned. They're saying re-rating so far that L&T was enjoyed was largely on the back of the prospects of consistent growth as far as the Saudi business was concerned. But however, what's actually happened now is that recent developments, recent news flow indicate that there could be a scaling down on spending programs by the Saudi companies. So number one, Saudi Aramco has already announced that it plans to cut capex in the medium term to the tune of almost $50 billion, and has also hinted at peaking out of capex earlier than the end of the decade. So that is one negative news flow as far as L&T's ordering prospects are concerned. The second one, of course, is NEOM, which was a Vision 2030 plan that had been put out by Saudi's Crown Prince. This also now is indicated that there could be a significant cut as far as the capex there is concerned. So on the back of that, L&T, which enjoyed a re-rating due to strong order prospects, they believe that this is something that the company may not enjoy in FY25. So they've gone ahead and lowered the ordering estimates by close to 6% for FY25, leading to a 1 to 4% cut as far as Kotak's estimate is concerned in the core EPC EBITDA margins.
Okay, all right. Thanks a lot for that, Vivek. Well, time to slip into a short break. You come back, we'll close down the markets for you. We'll also be waiting by for TCS's results. You don't go anywhere. Welcome back. Well, a few stocks are doing well actually from the broader markets, and one such stock is Sona BLW Precision. In fact, we have Hemang Jani who joins us on the show. Hi Hemang, good to see you and thanks so much for joining in. Well, in that truncated holiday that we had yesterday, the news that came overnight is Mr. Musk is coming to India, and the street will be optimistic that he sets up shop. A couple of potential beneficiaries could be Sona BLW. Your view on the stock is currently moved to the high point of the day.
Yeah, hi Nigel. I think because of this possible visit by Mr. Elon Musk, certain stocks are seeing action. One of them is Sona BLW, then Exide, and maybe few more auto engineering companies. And our view is that yes, from a short-term perspective, because of the excitement factor, you will see that impact. But at a broader level, when you see the run-up which is there in the stock, the kind of valuations at which they're trading at, and more importantly, the quarterly numbers, we think that there is not much of juice left in some of these names. Yes, as a tactical or, maybe a 5-7% kind of an opportunity, one can participate. I think Exide and Sona BLW both are looking okay from that perspective. But we would avoid chasing the stocks because of the momentum and because of this particular event.
Okay, so yes, that's a couple of auto stocks in focus for sure. Hemang, just to talk about the move on Sun Pharma today, of course, certain unfavorable developments with respect to one of their plants where the FDA has raised certain observations. But I mean, overall, how do you find the story? Would you buy the dip, or is it not? Does it not make the cut for you?
Well, I think there is a clear-cut case of overreaction. When you look at the report, Dadra facility, the impact does not look very significant. But I think maybe because of the moderation in the US specialty product portfolio, there is a little bit of profit booking. I think if you see another maybe 2-3% kind of a cut, Sun Pharma would provide a great entry point because I think the broad story, both in terms of US specialty as well as the India business, is looking quite attractive to us.
All right, Hemang, also a quick check on a couple of other pieces of news, that came in earlier today. Want to focus on the IT space, actually. That's going to be the big cue from here on. How are you all positioned out there? What do you expect from TCS? And will you favor the large or the mid caps?
Clearly, I think TCS and HCL Tech within the large IT services spec outperform about 0.5 to 1.5% kind of a growth. The rest of the companies, be it Wipro, LTIM, TechM, I think there is going to be a disappointment. And avoid buying any of the names, whether it's large cap or mid cap at this stage. I think we really need to have clarity about the growth because when you look at the previews, next year people are only talking about 4, 5, 6% kind of a growth. So I don't think it makes sense to kind of buy just for this quarterly numbers unless we have a more color in terms of what kind of growth are we really looking at for next year.
Okay, all right. Very quickly, what about HAL? One of the few stocks that are still trading in the green.
I think the theme is okay, but I think, it's more of a repetitive news flow, which is kind of hitting the media because the same order for which the, already the approval had come. Now, because the company has got the tender, we are seeing further action, which is not actually healthy. So I think though the theme is good, both Bharat Electronics and HAL, we should be mindful about what kind of order book they're sitting on, what kind of growth are we really looking at, rather than reacting to the news of the order.
Okay, all right. Hemang, thanks a lot for giving us your view on a few of those stocks. Just one notable move, actually, I want to point out TCS. That one's going into its results at the high point of the day. Let's see what they deliver in terms of the top line as well as on the margin front. Maybe some kind of, someone sniffing some good news, maybe the very fact that the stock goes home at the high point of the day. But it was a disappointing trading session today. The Nifty goes home with a cut of around 240 points. The Nifty Bank is down close to around 450 points. The breadth of the market, it was in favor of the number of stocks that were declining, but not too bad. You had 2 stocks that were declining for 1 stock that was advancing, but select themes did well. We pointed that out earlier. HAL goes home with gains. Vedanta was up and about in trade. Hindustan Zinc. Remember, on Hindustan Zinc and Vedanta, we had told you that if silver is going to be strong, there's only one way of playing it, and that's both those 2 counters. Besides that, you had Sona BLW. The hopes that Mr. Musk is going to come out here and set up shop. So that one, in fact, goes home with gains of close to around 5%. Crystal Services, we had the management joining us earlier today. They were talking about a 30% growth on the top line. They're talking about margins holding steady, and the debt has come down to around 140 crores. That stock goes home with a gain of around 20%. Entero Healthcare Solutions, initiating coverage out there. Positive brokerage note sends the stock higher. Puravankara, stock was locked up close to around 10%. Newland Lab is as well another rub-off on a good brokerage note that came in there. What didn't do too well? Well, Interglobe Aviation came in for selling, ended at the low point of the day. Lotus Laboratories, the street is sensing that maybe in fact they come out with some kind of an order announcement. It's not yet come. The stock goes on with a cut of around 3.5%. And Page Industries as well gets a cut of around 4.5%. Survey.
Well, red looking screen and an end, which is practically at the lows of the session, despite global markets actually doing really well. European markets right now are up between 0.5% to 1%, depending on which one you're looking at. But for India, this has been a bleak session. The large cap screen was absolutely wiped out. It wasn't one sector or 2 sectors that were declining. It was across the board. Banks, of course, led the fall. You have a lot of consumer names moving down. ITC, HUL, Titan, Asian Paints. A lot of consumer was lower. L&T was down on the Kotak note, as Vivek just explained. Actually, hardly any green ticks. TCS, of course, managed a positive close ahead of its numbers. But overall, a bit of a break on what was a roaring rally. Let's see, I think we'll await more clarity. This whole tax issue, whether it's here to stay or whether there'll be some weekend developments that clarify that old investments are not being touched. I think that's something that's definitely playing on the market's mind. But for now, it's 22,500 thereabouts once again on the Nifty. All right, we'll take a break on that note. Back with more in just a bit.